Hi everyone. Properly. So for those of you who are already online, please just say hi so that we know you are there and you can hear everything, and so that we can start with our webinar. Thanks for everybody for joining me tonight. I look forward to a little bit around the debt relief and the whole COVID-19 debt relief schemes that the bank are giving us, and what the effect of that is going to be. So hopefully you get some information that can help you, maybe help you ahead of time so that you don't get into more difficulty after this whole process is finished. So yeah, I'm not going to take too long. I don't think we need to sit here for an hour or an hour and a half and have a whole discussion. So I know the president is going to talk at 7 this evening. So I'm definitely going to be finished before that time. And hopefully I can share whatever I need to share before then. If you guys have any questions, you are welcome to chat with us. I want to thank Yapi for moderating. So he will be handling your questions. Thank you, Yapi. And then also I will, at the end of the session, have a little bit of a chat and try and answer all your questions that you do have. Okay, so let's start. It's just saying our connection is unstable. Let me just, there we go. So a lot of the banks have come to the party to try and help people that have cash flow problems and that are battling with taking their debt and keep paying their debt. So I'm going to go through what the 4 major retail banks are offering so that you get an idea, and then we're going to talk a little bit about the impact of that and if you should take debt relief or if you shouldn't. So let's get going, and let's start with the first one, and it's a question I get a lot from clients, is can I claim from my credit insurance for this if I can't work or if my company isn't paying me? So the question is a definite maybe. So a lot of credit insurance, they cover you for death, they cover you for disability, temporary disability, where they will pay the payments for you for a period of time, whether it's 3 months or 6 months, and then also for retrenchment. And I think the process comes in where you might have a claim is under the retrenchment benefit. Now, it's going to differ from credit life or credit insurance to credit insurance, the way they word it, etc., etc. Usually, it is for when you get permanently retrenched. That is usually when you can claim for up to 6 months, where the insurance will pay for your payments on your bond or on your personal loan or your credit card, etc., etc. So I'm not 100% sure whether all of the insurances will pay. I think what's going to happen is if you can prove that you have been temporarily retrenched or permanently retrenched as a result of this COVID-19 pandemic, you would be able to claim for those payments. My advice would be to get in contact with your bank if you do have a bond, if you do have a credit card, personal loan, and you do have credit insurance on there. Ask them to have a look, send you the policy details, and have a look at the wording. If you need some help with that, you are welcome to send us an email. You can email me direct at lawrence@retirehappy.co.za, or you can email info@retirehappy.co.za, and we can assist you and tell you if you have an opportunity to claim according to the policy wording that you have. So you are welcome to send us that, and we will advise you accordingly. The second question is, so if the bank is offering me debt relief, should I actually take this debt relief? Is it necessary for me to take it? If I can pay, but I'm a little scared whether my cash flow is going to go bad in a month or two, should I still go and take this debt relief? My advice would be that as long as you do have the cash flow to pay your debt, keep doing it. Remember, the fact that they give you a premium holiday or they give you some debt relief doesn't mean that it's not accruing interest, and we'll talk a little bit about that later. So sometime you're going to pay this money, and the problem is that you're probably then going to pay interest on the interest that you're not paying at the moment. So if you don't have to take debt relief, don't do it. You're creating more debt and more interest payments for yourself. So that would be the first thing. If you can cover yourself, if you can cover your payments, rather do that. Don't think of this as a quick way to make up some cash flow and for 3 months not have to pay that debt. Because at some point you are definitely going to have to pay it. The next question is, will you actually get the debt relief? Will you qualify? So most of the banks look at clients that are in good standing on their loans. What that means is if you have been a good payer, you have been up to date with all your payments, you haven't missed any payments, you will probably get the debt relief from the bank if you apply for it. So chances are that if you're a good payer, you'll get it. If you are not a good payer, you have a good chance that the bank won't give you that debt relief. So I think it's important that you actually talk to your banks as quickly as possible, even if you were a bad payer, even if you had gone through some difficult times and you missed some of your payments, etc., etc. Still, it's important to talk to the bank. Go and, or you can't meet anybody at this point, but phone them, talk to somebody, talk to an individual, and literally explain to them your situation and see if you can make any arrangements with them. So what is offered? What do these, just this button is annoying the hell out of me. Let me just close this button because I'm looking at myself and this button is just going all over the place and it's annoying the hell out of me. Anyway, let's move on. So what is offered? What does the banks offer? So the first thing is that most of the banks have the debt relief schemes and they have different ways of looking at it, but it's for a 3-month period. So it was the 1st of April, 1st of May, 1st of June, and it ends at the end of June or the 1st of July. Things should go back to normal. I don't quite understand why they started on the 1st of April, because I think the effect of the lockdown, etc., is only going to be felt by the end of this month and then by the end of the next month. So I think most people could actually still have paid most of their expenses by the end of March. But be it as it may, it starts at the 1st of April and it goes on until the end of June. So it's a 3-month period that you have this opportunity. You do not have to take the whole 3 months. You can decide to just do April and then move on in May to end of May, pay your payments as normal. So you don't have to take all 3 months, but you have that opportunity. So let's look at the 4 major banks and what they are willing to do. So the first one is Standard Bank. So with Standard Bank, I've got a question here from Brian Hayes. Hi, Brian. If you do this debt relief, will it have a negative effect on your credit record? Thanks for that question. It's a very good question. If you do the debt relief and you make an arrangement with the bank, you sign the documents that they give you, it will have no negative effect on your credit record. It is not going to be put on the credit unions as a default on a payment or anything. So it will have no negative effect. If you don't talk to the bank and you just don't make your payments, and then after the fact try and make an arrangement and say, well, you couldn't pay because of the pandemic and the lockdown, it will then have a negative effect. So always upfront speak to your bank, make the arrangements so that you are open and honest with them and they understand where you are. Okay, so Standard Bank was a difficult one. The only information I could get from Standard Bank, and if one of you are at Standard Bank and you had an offer from them or you got debt relief from them, please tell us in the comments. This is what I could get from Standard Bank. The first thing is they only offer debt relief to students, full-time students who are still paying student loans, and people who earn less than 7,500 Rand per month. What that means is anybody earning more than 7,500 Rand per month will get no debt relief from Standard Bank. So I'm talking from the information that I could get. So from the information I could get, Standard Bank offers very, very little debt relief for the retail customers, the general population or general clients out there. So with a student relief, you could get a payment holiday of 3 months on your student debt. If you're a salaried earner that earn less than 7,500 Rand per month, you get that 3-month holiday as well on your bond, your loans, your credit cards. What they don't give payment relief on is overdrafts. So that is Standard Bank. So if you are with Standard Bank at the moment, according to the information I could get, you have a very small chance that you're going to get debt relief. I don't know if they will be willing, if you go and talk to them or you chat to them over the phone, if they are willing to look at it on a case-by-case basis. But the information I could get was this. Let's look at ABSA. ABSA has debt relief packages for all their retail customers. So any retail customer at an ABSA bank with debt, that is car payments, bonds, credit cards, overdrafts, personal loans, any debt that you have with ABSA, they have one of two options. You can have a full payment holiday for 3 months, where you don't have to pay any premiums for 3 months, or you can reduce your premiums. So let's say, for example, if your premium, if you're only getting 80% of the salary that you got in March, you are now getting end of April, you can reduce your premiums by 20%. So you only have to pay 80%. So you can have that discussion with them. So you don't have to take a 100% premium holiday with ABSA. You can take a partial premium holiday with ABSA, which again, I would suggest if you have the cash flow, don't just not pay your payments just because you have that opportunity. F&B, also they offer it to all their retail customers. So any customer who has debt with them, car payments or hire purchases, bonds, credit cards, personal loans, all of those different debts. They also offer either a 3-month payment holiday, or they have a bridging finance option. So I have it on quite good authority that they lean towards the bridging finance option more often than not. So what is the difference? So on a premium holiday, what would happen is they would stop premiums for that 3 months, and they would add the interest that accrues over that 3 months to the balance of the loan, and you will then have to pay that off at the end of the loan, or the loan will be extended until that is paid off. A bridging finance option is where they take all your loans, all your debt that you have. So let's say your payments per month on those loans are 15,000 Rand a month. They multiply that by 3. So they say over the 3-month period, your payments would be 45,000. They will then give you a personal loan for 45,000 to cover those payments. And at the end of the 3 months, you will pay the personal loan and you will pay your normal payments. So be very careful with that bridging finance option, because suddenly after the 3-month period, you're not sitting with your normal expenses only. You are sitting with another personal loan that you have to pay off and will pay interest on, which I think is not the ideal situation. So with F&B, you have the premium holiday option or the bridging finance option. If you do talk to F&B and they do offer you the bridging finance option, you've got nothing to lose to discuss with them and see if you can rather do the 3-month holiday instead of the bridging finance. The last one, Nedbank. With Nedbank, they don't have a one-size-fits-all plan. What they say is they will create a personalized debt settlement or debt management structure for each client that apply for debt relief. They will still look at your standing with the bank. Are you in good standing? And then they will create a custom built package for you. I think it will be something similar to a payment holiday or maybe a bridging finance kind of model, which is similar to the other banks, but they don't have a blanket statement that says this is how we're going to handle it. Each client has to talk to them personally and discuss their situation. So if you're a Nedbank client, please chat to your bank and see what they can do for you. If you have already done it and they've given you an option, you're welcome to tell us in the comment section if what the offer was from Nedbank. One thing all the retail banks have also done is they have taken off all the SaaS switch fees if you go and draw cash at other tellers. So if you're an F&B bank account holder and you draw cash from an ABSA teller, there's SaaS switch fees that are charged over and above the bank fees. So they have taken that away to make it easier for people to draw cash at any bank teller. So it's a small thing, but I think the whole idea behind that is so that people can go to any teller, quickly get money, and improve the social distancing model. So what you need to understand with this whole process is that the interest that accrues through those 3 months, the fees that the bank charge on your loans, on your bond, on your car payments, those don't go away. So it's not like there's no interest for these 3 months. You don't pay these fees for these 3 months. Those things still accrue, and it has to be paid at some point. So those interests will be added to your capital, and you will still have to pay that. So be very careful to just take it and think, oh, I have an extra 2,000 or 3,000 or 5,000 Rand this month. I can go and bulk buy toilet paper or whatever it is that you want to do with it, because that money has to be paid sometime. Another question I got was from people who said, what about if I'm on debt counseling or under debt counseling? Can I then also get a premium payment holiday or premium holiday? The information I got, again, it's very difficult to find concrete information regarding it. What I have found out is that they suggest that you go and talk to your debt counselor. I keep saying go and talk, and we're not allowed to go anywhere. So talk to your debt counselor and have them negotiate on your behalf with the banks where they've made those arrangements. So if the debt counselor is a good debt counselor, they've got your best interest at heart, they will go on your behalf and negotiate and see if you can get your payments down. So the answer that I got is it is not impossible to do it, but you can't do it. You have to go through your debt counselor, and they have to go and talk to the creditors and see what arrangements they can make for you over this 3-month period. Okay, I've got another question here. The question says, what do I need to do if I can't pay at all? Will it go the normal legal way, or will they take into consideration the epidemic situation when it gets to legal matters? So if you can't pay at all, if you're not getting debt relief and you can't pay at all, it will still go the normal route. That's why I say always go and talk to your bank. I promise you, even if you are not in good standing, the banks want to help as much as they can, as long as you communicate with them. Don't just go quiet, because the normal processes will continue after the lockdown, and your credit record will be negatively affected. So always communicate. Guys, one thing that I always tell people about debt, when people get into trouble and they can't pay their debt, they tend to pay the people that threaten them and phone them and on the phone and on emails the whole time, the squeaky wheels. They pay those squeaky wheels. And the guys that keep quiet don't get paid. And it's those guys that bite you in the backside. So it's always important to communicate with your creditors. Remember, it's still your responsibility to make arrangement with your creditors. You made the decision to take the debt. You made the decision to go into that contractual agreement. Then take the responsibility of making arrangements. Be an adult. Go and talk and make arrangements. Okay, so let's quickly look at the impact for homeowners. I'm 20 minutes in. I've still got about 10, 15 minutes max. So I promised my guys that I won't go longer than about 35 minutes. So let's look at the impact. So what I've done is I can't go into the impact on each different kind of debt. So I can't sit here and tell you exactly what the impact is going to be on credit cards and on personal loans and on car payments. The easiest one, and I think it's the biggest debt that all of us have, is our bonds, or as homeowners. So what would the impact of this be, this whole 3-month period, if we don't manage it? So I'm going to give you an idea. So let's take a R1 million bond at a 10% interest rate. And I know interest rates have come down. 10% just makes it easier for me to do the calculations. So at a 10% interest rate over 20 years. On that bond, your repayment, excluding your fees, will be 9,650 Rand a month. And you're welcome to write these figures down so that you can remember at the end and have an idea of what the impact is going to be. So your repayment on a bond for 20 years, a R1 million bond with a 10% interest rate, will be 9,650 Rand, excluding fees. The capital portion of that payment, that is the amount that actually goes off the debt. So if you've got R1 million, from that 9,650, your R1 million doesn't reduce by 9,650. Your R1 million has, the 9,650 is made up of interest portion and capital portion. The capital portion of that payment is 1,316 Rand a month. So from the whole 9,650, the only portion that goes off your debt is 1,316. 8,333 Rand of that is interest. Okay. So the total interest over 20 years on a R1 million bond works out to 1.316 million. So on a R1 million property, you will pay 1.3 million Rand interest over the 20-year period. So after 3 months, so what they will do then is they will then take the interest portion and the fees portion and add it to the capital amount that is outstanding on your bond. So if you've started with a million bond, you haven't paid it for 3 months, that 8,333 times 3 will be added to your bond. So at the end of the 3 months, your outstanding bond will now be 1,025,000, not just R1 million anymore. Now that 1,025,000 needs to be paid off. So if you continue paying the normal amount of 9,650 Rand a month, your new payment term will be 260 months. So that adds another 20 months to your bond. So it's not going to be a situation where you can just add 3 months to the end of the bond and you'll still be able to pay it off with the same amount. It's not going to work that way. They're going to add the amount that you haven't paid to your capital. That's going to gain interest over the next 20 years. The new interest portion will be 1.49 million. So 1,490,000 Rand. That is an extra interest of 175,000 Rand over a 20-year period. So the fact that you've taken this 3-month premium holiday or payment holiday has created an extra interest of 175,000 Rand. So what do you need to do to get yourself back to the original term of 20 years? So what you would need to do on a R1 million bond is add another 250 Rand per month on top of your 9,650 Rand. That 250 Rand a month will bring your payment back to 240 months, 20 years. So keep in mind that probably if you're taking this premium break or this payment holiday, you are going to have to put more money into your debt to get you to the term. Another point I made here is be very careful of those bridging facilities where they give you a personal loan to cover these payments, because at the end of this 3-month term, you're going to have your normal payments plus an extra personal loan. So on a 45,000, if we're saying your payments are 15 a month, 45,000, your repayment on that is going to be approximately, if I had to guess, about 1,000 Rand per month. So you must take into account that you're going to be in for an extra 1,000 Rand per month at the end of this period. By the beginning of July, you're going to be in for an extra 1,000 Rand a month, depending on how much that personal loan is for. So what are our solutions? So how do we solve this and make sure that we come out of this as financially strong as possible? The first one is you need to use this time to really, really, really look at your expenses. Go in and really look at your budget. See where your money's going. Go through your bank accounts. Use our strategic expense planning tool if you have it. Get a coach or a wealth strategist to help you. But you really need to take control of your cash flow. You need to go and find cash flow. So we've done a lot of research in this regard, and the average middle to upper middle class South African family overspends on their budget by at least 10%. That means is if your budget is about 45,000 Rand a month, you have 4,500 Rand sitting in that budget somewhere that you cannot account for. You need to go and find that to help you after this lockdown is finished. Go and look at your expenses and go and determine which of those expenses are wants and which of those expenses are needs. Like we like to call it, which are lifestyle expenses and which are living expenses. So what is the difference between living expenses and lifestyle expenses? Living expenses are the expenses you incur or the cost you incur for you and your family to survive, to live. That is important. So those things, usually there's not a lot of leeway there where you can cut expenses quickly. Where we can cut is on the lifestyle expenses. Lifestyle expenses are the ones. Those are the things that make your life more comfortable, that makes it easier for you. The nice things, that newest cell phone contract that you just upgraded to, the top of the range internet connection, DSTV, all of those kind of things that we are spending money on, which are lifestyle expenses. Really go and look at those expenses of yours. And we need to all go and tighten our belts, because that is going to help us to get through this process as quickly as possible. I've got another question from Jakes. Hi, Jakes. Thanks for joining us. How will the epidemic influence us on getting funding for investments? I assume you're talking about property investments specifically. I think there's two trains of thought there. The one side is the banks. After this process, there will be a short period, I think, where the banks will tighten everything to just see how people are recovering from this. And then after that, banks will want to take or give people loans again for property investment, etc., etc. I do think there's going to be an opportunity moving forward in the property sector specifically. A lot of people are going to go and look for rental properties. A lot of people are going to sell properties, which is going to make it a buyer's market even more than it was over the last couple of months or years. So I do think there's going to be a lot of opportunity there. But I also think that just after the lockdown and this whole thing has blown over, banks are going to be a little bit tight for a month or two, just to see how they've recovered before they're going to start really going out and giving out loans again. So I hope that answers your question. Okay, so where was I? Okay, yes. So that's the first thing. You need to look at your budget. You really need to look at your expenses. What is your wants against your needs? How can you cut those expenses? The second thing you need to start looking at is you need to start looking at ways on how you're going to increase your income after this lockdown. You need to already start planning. What is your strategy? What are you going to do to earn an extra 500 Rand a month, 1,000 Rand a month, 2,000 Rand a month, 5,000 Rand a month? Guys, it's something I've been preaching and something I've been talking about for the best part of 21 years. We all need to earn multiple sources of income. If you think your salary is going to create financial independence and financial freedom, you are mistaken. You need to get to a point where you earn multiple sources of income. This period is the ideal period for you to start doing research, start educating yourself, find strategies, and start implementing those strategies when lockdown ends, so that you can start earning an extra income, even if it's only 500 or 1,000 Rand a month. If your planning is correct, you have control of your cash flow, that 1,000 Rand a month can make a massive difference to your financial situation moving forward. So there's a system that I created to help people achieve their goals. And specifically, if you want to start earning extra income, that system is called Emmitt, I-E-M-I-D. So if you want to write it on a piece of paper, you can start from the top and say I, then E, then M-I-D, Emmitt. What does Emmitt stand for? This is the system that helps people to achieve their goals. The first I stands for inspiration. You need to be inspired to take action, to do something. You have to get to a point where you want to go and say, listen, I cannot continue in this way. I need to do something to change. So that's the first thing, is getting that inspiration. The second one, the E, stands for education. Once you have that inspiration to take action, to get off your butt, to start doing something, the first thing you do is you need to start educating yourself. Do research, read, watch videos on YouTube about different things that you can do. Find ideas, discuss it with the people that's close to you. Get an idea, fulfill a need, add value. But you need to educate yourself. I see so many businesses with fantastic ideas, or people with fantastic ideas for businesses, that never get off the ground because they just started with the idea, jumped into it without educating themselves. So it's so important for you to take that education seriously. This next one, the M, stands for motivation. You need to be self-motivated. You need to motivate yourself. You need to believe in yourself that you can achieve it, that you can earn that extra 1,000, 2,000, 5,000 Rand a month. If you don't have that self-motivation, read books, listen to things that could motivate you, talk to people around you, focus on the successes that you've had before. But you need that motivation, because without motivation, you can't move to the next I. And the next I is called implementation. So that's the next I. You need to implement. All the knowledge in the world is not power. The implementation of that knowledge is power. So through the education process, you will get the knowledge. You will then motivate yourself to implement that knowledge. And that is where the real power lies. But the moment you start implementing, you'll get to the D. When you start implementing, you will get obstacles. Things will go wrong. All these people, all my students, I always say this to them when I start working with my students. I say, expect things to go wrong. And those students of mine that's listening, you will immediately know where it's gone wrong with you. If things go wrong, there's always obstacles. And then you need the last D, and that D is called determination. You need to be determined enough to push through those obstacles, because those obstacles will help you, or by pushing through those obstacles, it will help you achieve success. So Emmitt stands for inspiration, education, motivation, implementation, and determination. So it's very important that you also have somebody to get you over this knowing doing gap. And that's why we created, or we train wealth strategists that coaches people to help them implement these principles. So if you are interested in talking to a wealth strategist, we have a competition that I'll talk to you about when we finish. And also you can contact us. You can email lawrence@retirehappy.co.za or info@retirehappy.co.za. For more information, we can get one of our wealth strategists to chat with you. The next thing is, so once you've started and taken control of your budget, you've then increased your income, you then need to create a positive cash flow. And that you do by either decreasing expenses or increasing revenue. And that's what we've addressed in the last 2 points. Once you've got that positive cash flow, you then have to create a debt settlement strategy. You have to have a strategy to get rid of this extra debt that you now have. And we focus on 2 types of debt. The first one is unsecured debt, and the second one is secured debt. So let's look at unsecured debt first. That is your credit cards, your personal loans, your overdrafts, all of those debt. So what is the strategy you use to get rid of that debt as quickly as possible? What we teach people, and one of our tools help you with the whole calculation, the unsecured debt settlement tool. What you do is you take all of your debts. Let's say you have an extra 500 Rand a month available. You choose one of those debts. Let's say it is your personal loan, because that has the highest interest. You then take your normal payment on that personal loan. You take your 500 Rand, add it to that, and you pay that loan off quicker. Only that one you focus on to pay off quicker. The other debts, you pay the minimum amounts on that you have to pay on. You then focus and get rid of that first debt. Once you've finished that first debt, you take the payment that you usually paid on it, plus the 500 Rand that you have extra, and you move it to the next loan. You then take that loan, you take the normal payment, this extra amount added to that loan, finish that one. Then you take that whole amount of cash flow, allocate it to the next one, the next one, the next one. And you will be amazed at how quickly you can get rid of all of these loans. What we tend to do is we don't build that momentum. We pay one loan off, and once that loan is paid off, we just get the cash flow extra in our bank account. And because we don't have a proper budget, we don't have proper control of our cash flow, we just increase expenses somewhere else. We go and upgrade our cell phone contract because we now have some extra money. And we never build the momentum to get rid of our debt. So it's important that you build that momentum. Then I'm going to quickly talk to you guys about our bond settlement strategy. How do you get rid of your bond quicker? We always teach people how to do it in half the time. So if your bond is 20 years, how do you do it in 10 years? So I'm going to quickly run through 3 strategies with you guys to do that. The first strategy is the simple one. You just pay in an extra amount every single month. So what people misunderstand with that is the amount of, or the effect of a small amount on their bonds. Even an amount of 200 Rand a month makes a huge difference. If you look at our scenario where I explained what this effect is going to be on bonds, 250 Rand a month took a R1 million bond down from 260 months to 240 months. That made a 20 month difference just because you paid an extra 250 Rand a month. So never underestimate that small amount that you pay extra on your bond. The second one is where you pay in lump sums during the year. So let's say, for example, you get a tax benefit or a tax refund at the end of the year. Instead of using that tax refund to go on holiday or do whatever we do, buy a new car or whatever, you take that and you put that as a lump sum into your bond. That will also reduce your capital and bring your bond down much quicker. And then the last one is the most powerful one. What happens every year is, hopefully, we all get a salary increase every year, and all our other expenses go up by a certain percentage, usually inflation. So your water and lights go up every year, your grocery bill goes up every year, etc., your medical aid, all of those kind of things. But we tend to keep our bonds at the same amount. So what we teach people is, in the month that you actually get your salary increase, you increase your payment onto your bond with the same percentage as what your salary increase is. And you will be amazed at what that does to your payment. That cuts off years. We're not talking about months, we're talking about years, 60 to 100 months. We're talking about cutting off your bond by just increasing it every year by 5 or 6%, whatever your increase is. So that is how to get rid of your bond. So guys, there's some ideas. One of the big things that I always see with these kind of discussions is that a lot of people battle with this knowing doing gap, where you know what you need to do, but it's very difficult to actually go and implement it. So if you really want somebody to help you, to really keep you accountable, to breach that knowing doing gap and to coach you, you're welcome to send an email to us. We will have somebody, no obligation, come and chat to you or chat to you on Zoom, tell you exactly the structures that we teach people to take control of their cash flow and move forward and become financially free. So, yeah, I've answered most of the questions. If there's any other questions before I end, you can quickly put it on. I am still on for another 2 or 3 minutes, and then I'll be done. While I'm waiting for any questions that you might have, I'm going to tell you a little bit about our competition we have tonight. So you are welcome to come in or to, what's the word? Enter our competition. Geez, that was the word. Okay, so how you enter the competition, you WhatsApp your name, your surname, and your cell phone number to 082-641-3555. You just WhatsApp your name and your telephone number 082-641-3555. You are also welcome to go and like our page on Facebook, Retire Rich and Happy. It is in the comment section as well. And then also subscribe to our channel. If we've got lots of videos of discussions I've had on different issues. So you're welcome to go and subscribe to our channel. The prizes are as follows. The third prize is worth 1,500 Rand, and that is a 45-minute in-person consultation with one of our wealth strategists. So you have 45 minutes with a wealth strategist where you can discuss, ask them questions, anything that's bothering you, no cost involved, no obligation involved. You've got 45 minutes with an expert, and they can help you and answer your questions. The second prize is worth 3,000 Rand. You have a 45-minute consultation with a wealth strategist. Again, ask them any questions you want, find out what's bothering you, how you can solve those problems. But you also get all our financial management tools. Those tools include a budgeting tool, which we call a strategic expense planning tool, which will help you take control of your cash flow. There's a bond settlement tool that shows you exactly what these strategies do and how to optimize them. There's an unsecured debt settlement tool that I've explained to you. and then also an investment calculator. And then the first prize, or the grand prize, is worth 5,000 Rand. That is the tools. It's a 45-minute consultation, and you get a free coaching session with one of our wealth strategists, where the wealth strategist will coach you in the first session of how to take control of your cash flow, how to implement the bucket system, or the variable cost segregation system that we call it, to help you to take control of your cash flow. Guys, I really thank you all. Thank you for joining me tonight. I will be on again next week, Thursday. And next week, Thursday, I am going to talk about the 5 steps that you can follow to retire rich and happy. How do you go about implementing these 5 steps? What are they all about? And how does it help you to get to retirement? I know all of us, that's the end goal one day. We want to get to retirement, and we're sitting with a retirement crisis where 96% of people in South Africa can't retire. And what if you could do that in 10 years? Instead of working for 40 years and not getting there, what if you could do it in 10 years? And we've created a system that we help people to get there in 10 years. So if you're serious about that, serious about financial freedom, please join me next week, Thursday, same place, same time, and I will have that discussion with you. Thanks a lot for your time, and hopefully we hear that we can go back to work from the 1st of May. 2nd of May. 1st of May is a public holiday again. So 2nd of May. Right, guys, thanks. Have a great evening and enjoy the rest of the evening.